All right, my people, we are live. Welcome to this live stream. My name is Jeremy from the Free Minds, and we're about to dive into some charts and see what's going on in the markets. Guys, it's so much fun. There's so much going on in the markets actually. Like, I should do this stream for about 2 hours and just break everything down. There's so much fundamental factors right now. Wait, let me see first that everybody's on and the connection is good. Good morning, Noor. All right, cool. So this is where we're at. We have another bank going down, Credit Suisse. I warned about it. I warned about it in my previous streams that it might go down, and it's actually about to go down. But the thing with Credit Suisse is, why is this so important? Why is this so big? Credit Suisse is a big bank. They have about 1.4 trillions in assets, 1.4 trillion euros in assets. That's enormous amounts of money. To put it in perspective, the whole entire GDP of Europe was 15 trillion, I think, 15. So this is like 10% of the entire GDP of Europe. And this is how much they hold in assets. And this is not only affecting Europe, because this is not only European assets they have. They have massive amounts of assets that they hold for US and for other parts of the world. So, like global operations. So, if they go down, you're gonna see the world economy shake a lot. Like that's a major bank, major institution going down, and that will affect the whole world. What do we do with that information? Well, we enjoy it, because the thing is like this. Well, like on these streams, what do we trade mostly? We trade Bitcoin, we trade gold, and we trade Euro USD. Now the thing is like this. When the bank system goes down, when banking starts to fail, people are looking for alternatives. It's like I said, when the trust for the banks go, because the whole banking system is built on trust, and when that system goes, people need to find alternatives, and those alternatives are, the most common one is gold, and gold has always been like a hedging against the financial system. As soon as we see crisis or shakiness in the financial system, then gold is always a good hedge against it. And then we have the new hedge that has come up, and that is of course Bitcoin. So this is the reason why they gain strength when the traditional finance system, TradFi, is shaking, and that's that. And that is that. So, with that said, with those fundamentals, and just to understand, it's not only Swiss Bank, and it's not only Silicon Valley Bank that already experienced it. We got Signature Bank and we got Silvergate also in the same mess. So, three major US banks and now a major European bank, and we're not done there. Deutsche Bank, which is also a major player in the financial world, that also got projects globally in the US and in Asia, South America. Even they, like, same thing. They are their assets ain't what the balance sheet was promising. So even we might experience the same thing as Credit Suisse. We might experience that with Deutsche Bank as well. So these banks are lining up now. The chaos is lining up. The recession is sniffing us on our necks. So what does that mean? That means that we're gonna have very volatile markets. Very volatile markets. I didn't send out any signals yesterday. Why is that? Number one, because the market were a little bit crazy. Then of course, if I would have focused, I would probably find something. But Also, to be honest, I was very busy yesterday, and I don't want to send out signals when the market are this crazy, this volatile, this unpredictable, and I'm not fully focused in the markets. All right, because I'm also responsible for the trade ideas that I've been sending out. You guys trust me, then it's important for me to use that trust to do the best I can when charting these markets and when we're charting them together here. All right. Hello, Daniel. Good morning. Um, with that said, let's jump into the charts. Let's look at first what happened yesterday. What was going on? Like we had major volatility yesterday. If some of you guys caught some pips, made some nice trades, let me know in the chat. I hope so. I caught one trade and actually lost that trade. So after that, I didn't touch the markets anymore. I was just happy that I didn't send out that trade because I went to a loss. It stopped me out actually and then moved exactly in my direction, in the direction I wanted to. Right, first off, we got Bitcoin. Let's look at Bitcoin. So if y'all been on these streams, we've been looking at this channel for a while now, right? This big channel and the small channel. This big channel and then the small channel within it. We've been looking at it for a minute now, and we've been also looking at this sweet spot zone here. So this highlighted yellowish zone, and then this major supply zone that we got up here at about 30,000 US dollars for one Bitcoin. Now, we have been, yeah, like guys, the chart tells its own story. Like, look at this. We had this pump. And look how we've been playing around. This is not small moves. This is major moves. And this whole drop, and then again this pump. Like these are major moves, and this is because it's a lot of fear in the market now due to the situation with the banks and everything. So people are, yeah, there's a lot of there's a lot of fear in the market, just to be honest, and people don't really know what to do with this fear, how to handle the situation. Now, we looked at we looked at the big channel and this line, which is the channel within. We know that this yellow zone is the supply zone, sorry, the sweet spot zone. And looking at this channel, we're starting with this trend line first. What do we see? Market coming up, respecting it, breaking above, respecting it, coming below again. So it's playing around this trend line. It's basically not really knowing in what direction to move. Let me remove these things. It basically, like, it's like you come to a crossroad and you don't know to what way to in what direction to go, left, right. This is basically the same thing. This is sellers and buyers competing or battling each other, and nobody is really getting the upper hand. So we need to find strong confirmations to get into this market. Me personally, when it comes to Bitcoin, I'm not very sure if I want to, like, we can enter scalps, short trades, trades for 10, 20, 30 pips within this range here. But the real moves won't happen inside this yellow zone. We need to get the market to get out of this zone, either up or down. And that's what we're looking for. Right now, what we want is the market, of course, to retest this trend line here and show that it wants to move up. The only thing is, it's playing around so much at this trend line, at this zone. So even a retest, even a breakout like we see now, and let's say this candle comes back down, retest this trend, even that is not a very strong confirmation. It's a confirmation of the market maybe bouncing up a couple of pips, but it doesn't tell us that we're getting that big move that we want. According to that rule, we already got the trade. So we broke through, we came back down. We broke through here, came back down. and we are now moving up, which is the confirmations we're always looking for, right? And if y'all guys think that is good, y'all more than welcome to take this trade. I personally won't take this trade right now. I don't feel confident enough with it. In the meantime, we got this trend basically here. So we broke above this trend here. No, sorry, not trend. I mean the resistance here. You guys see, like, this is what's so nice with patterns in the market, that you see this trend line, the orange line. You see this whole trend line here, and you see how nice it conflues with this support that we got here. Market just broke above the support together, and it's getting confirmation from the 20-day EMA that we got support there. So this can be a nice buy. But like I said, this buy, for example, like if you want to enter this buy, this is how it would look for me. Take profit, boom. Like, it's that small. This is the only thing I can, and this is why I'm not jumping into it, because the only thing I can expect from it is, I already did its retest, is for it to come and sweep like these wicks here, fill this wicks. And to fill it, it needs to come up 50% to that wick, so about here. So that would put us about here, and that's the trade that I see. Of course, it can move up a lot from here, but we don't know. This is the only trade. So what I would do is, if you're jumping into this trade, go in, let it move a couple of pips. As soon as it's like 10 pips in profit, move your stop loss to break even. Like, secure your trade, because anything can happen. In the same time, while I'm saying that, we also gotta understand that anything can happen. And with the situation that we just spoke on about the banks and everything, Bitcoin might as well just go on a new rally and start pumping, right? So we want to be ready for that as well. Today I'll be much more active on the charts, so you'll see me updating in the Telegram group all the time. Yo, good morning, Tony. It's going good, bro. No trades yesterday. I don't want to say a boring day in the market, because it was a very action-packed day in the market, but that was a problem. It was too action-packed, so I didn't want to send out any trades. Makes no money shorting from boom, 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 boom. Nice, Nor. There's always a feeling when you short the market, that most people just make money on buying Bitcoin or buying crypto and holding it, and then you short it. Well, you make money on it on the market going down. So you're actually making money while people are losing money, and there's a certain satisfactional feeling with it. It feels like you belong to that 1% that actually are making money while everybody else ain't making money. Now, it ain't a nice thing that everybody ain't making money, but it's always going to be like that. There's always going to be people that lose, people that win. So you just got to decide on what side you want to stand, on the winning side or on the losing side. Guys, that is it for Bitcoin. So we leave it like that. We jump into the other markets, because I think there's a lot of stuff going on the other side. Yeah, I'll leave it like that for now. One last thing. Let us just check fib from this last swing. Now look at this. This is also important for me to explain for you. So when you're pulling fib on Bitcoin, very important thing. Why didn't I pull fib all the way to this wick? This is the lowest point, right? I should pull it here. I didn't. Now, why is that? It's because and this is especially for Bitcoin, not so much when it comes to Forex and gold. It's because this candle here is the lowest closing candle. You see, it's closing lower than this one or this one. That's the lowest closing candle. So you always want to use the wick from the lowest closing candle, all right? Same thing on the top side. You want to use the wick from the highest closing candle. And this is on the 4-hourly time frame. So on the you always go to the 4-hourly time frame and you close and you pull the fib from the highest closing candle to the lowest closing candle. You close it and you pull it from the wick, all right? To get as much accuracy as possible. Why is this so important? And why does these fib levels be so very respected? It's because HFT, if you don't know what that is, it's high frequency trading. It's the bots basically running the markets. They execute a lot of trades very fast, and a big part of Wall Street are ran by these bots. They are all connected to a major AI bot called Aladdin. This is all, yeah, you guys can Google it or see it on YouTube. Anyways, they all use these fib levels, and this is how they use them. So we need to see the same thing as they see, all right? And this is it. So if you want to go into a Bitcoin trade, wait at least till this level break, 23.6, all right? Let it break. And then when you enter the trade, do exactly what I said here, like you're entering it here, have your first take profit maximum just underneath 38.2 Fibonacci retracement. That would mean an entry at about 24,800, I would say, ish. And take profit would be at about 25,000. 20 pips. That's the first take profit. Then you can, of course, have multiple take profits along the way and score some more pips. This thing might as well start pumping with the situation we got now with the banks. I might even jump in myself. If I do so, I'm of course calling it out in the Telegram channel. Let's go to gold. Let's look at gold. Because we had some action in gold this morning, and yeah, man. That's some nice action. You guys see this? This is something. All right, look. I see a thing here that I want to explain. That's very important. So we have a major support zone here. It's the top of the big sweet spot zone. We spoke about it before. If you've been on this on these streams, it's the sweet spot from the bigger swing. This whole swing here on a daily time frame. Let's zoom in again. 4-hourly time frame, hourly time frame. So we have this major support here. The market's been respecting a lot. What happens? It looks like it wants to break through. It comes back up. What do we call these things? Fake outs, right? It's a fake out. And after that we saw a pump. Very nice pump. Now market is coming down. It kind of did its relief. What I mean with relief is that people that when it came in here or here, they took out their profits. They sold off their profits, so market dumped a little bit. I believe that this market is going to move up more. Gold has already been on a crazy rally, and yes, of course, we might see something like this. But looking at the fundamentals, I think gold is going up. Because to get back to what we spoke on in the beginning of the stream, Credit Suisse is going down, or it's already going down, and Credit Suisse is actually being bailed out by the Swiss National Bank, so by the central bank of Switzerland. They've been bailed out. I think it was $50 billion or something like that. So they will survive, but still though, just the fact that they are shaking and would have gone down if they wouldn't have been bailed out. that is enough to really shake the market and to push gold up, because people want to invest in gold when they cannot, when they don't trust the banks. So with that said, I can easily expect this market to push up from here. The only bugging thing for me is we missed a really good entry this morning. I hope some of you guys got this trade. If you did, please let me know. But this here was a very good trade. Like when the market came, I'm gonna explain what I'm talking about. Market did some kind of fake out here, came up again, testing testing the underside of the support zone as resistance. Didn't hold. Broke through, came up, retested. A very nice retest here. This is a perfect entry, and then it went up. So it's already up. Like if you say this was the entry, okay, it's already up like, yeah, 70 pips. Yeah, we missed it. Let's look for another trade. I hope some of you guys are in this trade for some reason, but me personally, I'm not. I would have been if I would have seen this, but I was actually busy with my morning routine. Um, let's see the market come back down to find another entry. If it doesn't come back down, then we need to find the new levels to look for entry, either for buy or sell. Those levels. One thing that I see right now on the hourly time frame is that we got a little trend downwards here. Yeah. So we got higher, a high, a lower high, a lower low. I mean, a lower high, a lower low, and now we got new high forming. Let's see if this high managed to break it. Basically, already failed with it to break these highs. If it breaks this level, let me remove some of my beautiful Picasso drawings. If it breaks this top here, then I think I'm going for a buy on gold. This is the level I want to see it break. Either that or market comes back down and start testing this level again. Yeah. Yeah. You guys see what's going on. It's we got the sweet spot, of course, where you find most of the liquidity, and you see the market came up, dipped, came back down, test the 20-day EMA again. So buy on gold at around 1920. In this case, actually 1924. Like we need to see this top here break. We need to see it break. Either that, or if the market pulls back from here now, if it pulls back, then the buy we're looking for is 1914. So 1914, 1915-ish is where the buy would be. Here. This would be the buy zone. Now I'm on the 5-minute time frame because I just want to get a hands of what the market is doing right now. And yeah, it looks like it's pulling back actually. Or it wants to, it tries to. got this spinning top here. Yeah, market. Look, the market right now is very uncertain. We need to let the market find its direction. As I said, today I'm going to sit in front of the charts much more than I did yesterday. So I'll keep you guys posted and alert on what's going on in the market. Like we might as well, like you guys seen, like gold is trying to push down a little bit, and we might as well just come down here, bounce off this level. But the thing is like this. I don't want to call out any trade where it's like it might do this or it maybe does this. Like this is not what we're looking for. We're looking for trades where like, okay, boom, boom, boom. We have 5 confirmations showing that the market is going in this direction. Let's do it. Let's jump into it. When we have situations where we have like one out of 3 that the market, like this here, I would say 1 out of 3 that the market bounces off this level. All right, here 3 out of 4 that it bounces off this level. All right, so it's a much stronger and higher probability that we bounce off this level. Same thing with this level here. Here, like I said, 1 out of 3. 1 out of 3 is not good enough for us to get into the market and going for a buy. That means you're very hungry for a buy to get into the market and just trade. And then I would say trading is not the right thing for you right now. You should more focus on studying and developing a proper mindset, because when you trade with those kind of emotions, that's when you start stacking up losses and blow up accounts. We don't want that. So you see, it's testing the level right now. Wants to break through. Sellers are trying to push down. Next line of defense is of course the 20-day EMA that we see here in the 50-minute time frame. I think the market will probably reverse somewhere a lot around here. At these levels with the 200-day EMA. So I think somewhere around here would be the optimal entry zone. We cannot put any buy limits. Why? Because we need to see how the market behaves when it comes down here. If market comes down here, we need to see how it behaves here. Does it show sell pressure or does it show buy pressure? If it shows buy pressure, we of course going into to a buy. If it shows sell pressure, like it looks like the market is trying to push down and crack this floor, this support, then we need to find a setup for a sell. All right, we leave it like that for now. Getting back to it and look at it later. Euro USD, what's going on with Euro USD? It has also been a major rally, and it's because of course the dollar is volatile as shit right now. This is the US dollar. Oh, by the way, let me address something. So I got this question about, structures with the US dollar and Dixie. So let me address that quick. The US dollar, the Dixie, doesn't respect structure in the market as, for example, gold or Bitcoin or Euro USD. It doesn't respect it in the same way. Then you might ask, like, okay, but Jay, look, you pull this trend line and this channel here. What is it that it doesn't respect? Yeah, well, the thing is like this. The trend lines are very good just to find direction in the market. I understand that the trend up here is up, and that's very good. That's what a trend line actually is for. But you cannot count on the US dollar coming down here and it's going to respect it perfectly like it actually did here. Why is that? Because the US dollar, the Dixie, is so dependent on fundamental factors. So when we chart up Euro USD, when we chart up gold or Bitcoin, and we're looking at the technicals will play out about 80%. Like 80% of our analysis should be technicals, and 20%, about 20 to 30% fundamentals. When it comes to Dixie, the US dollar, I would say about 60% fundamental, 40% technical. So this doesn't weigh as strong as if this would have been a Euro USD that we're looking for, a structure at Euro USD or something like that. Still though, it's nice to find these structures to understand in what direction the market is moving. And right now what we have, when we're zooming in again to the structure is, sorry, I have to skip back. So what does the US dollar respect if it doesn't respect structure? It respects supply, demand, volume. All right, supply, demand, volume on the technical chart, and of course fundamentals as mentioned. So you always want to look for the supply and the demand zone. That is very important when we're looking at Euro USD. Sorry, at Dixie and Fibonacci. But of course, we use Fibonacci to find supply and demand. And why is Fibonacci is the same thing? Because people see those levels and they respect them and they use them to buy and sell US dollar, to hold US dollar or to sell off their US dollar positions. So let's do like this. So we can see this a little bit clearer. Let's do like this. Let's remove this and this. All right, cool. So look at the Dixie. I'm pulling fib from here to here. So this whole sequence, right? What has it done? It has come up. This is the top. Has retraced, come into the sweet spot zone, picked up supply, came up, respected the 38.2 Fibonacci retracement perfectly. Came back down, back up again, respected the 23.6 Fibonacci retracement perfectly, like spot on, and it's now down and testing the 50% level, okay? But it's the 50% level from this swing. So it's not the most recent swing. The most recent swing is this swing here, all right? The most recent swing is actually this one. We have a top here. But the most recent completed swing is this one. So market is back down, testing the 50% Fibonacci retracement, which is the sweet spot zone. It's testing it, and I actually think the thing is here, we have a lot of liquidity here, and now we want to see Dixie come down at least halfway in to this zone before it moving back upwards, or if it wants to continue down. With the situation we got now with the banks, we might see the US dollar drop, but we don't know. And of course, as we know, the US dollar affects gold, Euro USD a lot. Bitcoin not as much, but Bitcoin as well. So if this thing starts to drop or come into the sweet spot zone, we will see gold moving up from here, Euro USD moving up from here. If it doesn't, it doesn't. We need to reassess the situation. Yeah, we got major support here also as well. Another thing to keep in mind is this. I almost forgot. Today's Thursday. It's Thursday, right? Yeah, today's Thursday. And we got red folders. Red folder means high alert news that with high impact on the market. So AUD is not a pair that I trade very often. So, but if you do it, then keep in mind that we got news from Australian dollar from Australia coming at 1:30. Forex Factory, it's free to see the, you go to calendar, it's free to see this news. So go in here, study what it says. Actual graded and forecast is good for currency, so it means it's good for the Australian dollar. Australian dollar will pump. Anything paired against it will drop. But more importantly for us is these red folders, the Euro red folders. All right, 2:15 we get these news, and ECB, the European Central Bank, is having a press conference. This is very important. 2:45 is that. Keep an eye on that, because pairs like Euro USD, you will see them very volatile. when this happens. All right, so you'll see a lot of moves, and there will be a lot of pips to catch. But like I always say, if you don't know what you're doing, don't be inside the market when the news drop. Hop into the markets when the news has dropped, but don't be inside inside the market while the news drops. Because, for example, we had a gold trade on Monday. I think it was Monday, yeah. And what happened? Market just moved. I think like 60 pips, 70 pips down, and then 70 pips up again, and then 70 pips down again. So doesn't matter if we were in sell position or in a buy position, we would have been washed out in either direction. All right. So ECB press conference, the European Central Bank press conference, 2:45. Keep that in mind. Very important. We also major moves in the market. More hawkish than expected is good for currency. So we'll see. Monetary policy statement. What do we got here? Interest rates on the main refinancing operations that provide the bulk of liquidity to the banking system. Oh, okay. So this is basically how much is it going to cost for the banking system to borrow money? Just to put it very short. And of course, that is very important, because if it costs more for banks to borrow money, then banks themselves will increase their interest rates to their customers, which means money becomes more expensive, because which means people tend to hold the money instead of borrowing money from the banks, which is of course good for currency. Actually greater than forecast, good for currency. So that is a strength for euro. So let's say, for example, euro USD. We're trading euro USD. If we get a higher number than what's expected, which what is expected is 3.5%. If we get a higher number than that, you can definitely expect euro to pump, which means euro USD goes up. And that's the fundamentals for that. With that said, let's look at Euro USD. Where are we? USD has also been on a major volatile move. Let me just check this quick here. So we're still inside this big sweet spot zone. You guys see it very clearly. It's respecting the structure. We're still respecting the structure. We were trying to break underneath, which didn't happen. Candle closed above, so respecting the structure perfectly, actually. What it did also, it tested the 50% Fibonacci retracement, so this, the bottom of the sweet spot zone. No, rejected. Market came back up, showing a lot of strength. Euro showing strength right now. We inside the structure again, so actually we should go up from here. Where the buy would be right now, nowhere, because we're in the middle of the candle. Let me see. Let me just check this markets quick. See where we are exactly, if we have some kind of buy situation here. So what I'm looking at now is this sequence and this sequence. We have two sequences here. We have this big sequence from here all the way down, and we have this smaller sequence inside that big sequence. This is what I'm looking at, and this is the Fibonacci lines that you see here. So the dotted lines are the big sequence, and the the filled lines are the smaller sequence. And looking at that, I can see that we just broke above the 38.2 Fibonacci retracement on that major big swing. Remember, the dotted lines are the big swing, the big sequence. And we just broke through. So what I would want to do here is, yeah, I would want to see this market. Look, so like I said, we might have a buy situation here. I would want to see this market retest this zone again for potential buy. What I mean with retest, I want to see this candle come down, or next candle, whatever. I want to see a candle come down, test it as support, like really showing that it's rejecting this support here. Boom, then we have the entry. If it doesn't hold, next line for possible entry for a buy would be here. Between these two, what do we got? We got about 35 pips. Yep. We'll see. We're looking at this. So guys, look. We don't have any entries in the market right now. As I said before, if you want to, you got this entry here on gold. But me personally, I'm not getting in the market there because I don't feel confident with this entry. It might go up, it might go down, it might go either way. This here is a whole nother story. This is a very good entry for me. Same thing with Euro USD. Wait, let me just call out the level. So this is gold and the levels I'm talking about. So now where we're at now is about 1920, 1918. I don't see that as a very strong entry for buy. The strong entry level for buy is about 1915 to 1914. All right. Euro USD. First line for entry for a buy 106. 106 100. 106 100, and the next line for entry for buy is about 1.05 800. Yeah, 1.05 800, and here 1.06 100. All right. But as I said, no buy limits. We need to see how the market reacts to these zones because we don't want to get stopped out with our buy limits. Gold, do we see an entry? Yeah. Gold. We have either this here or maybe this here. I have to research the markets a little bit more. I have to dive into the fundamentals. I might give you guys a report in the signals channel on what I've discovered or what I found out. But right now I have to dive into the fundamentals more before I can call this a buy. But this would be the buy entry for me, this zone here, which is about 24,600. And then, or this level here, about 24,780. Right now, we're leaving it like that. So, guys, with that said, I'm leaving it for now. There's no entries for us. I will call it out in the Telegram channel. If you ain't in the Telegram channel, link is in the description box below. With that said, I wish you guys a blessed day. Stay prosperous and trade safe. All right? Peace out.